will get my drink on tonight. I'ma get loose, get wild. If you're not in the mood right now, honey, don't kill my vibe. I will get my drink on tonight. I'ma get loose, get wild. If you're not in the mood right now, honey, don't kill my vibe. I'm gonna party until I drop. When I begin, I don't know how to stop. I can party on till the morning comes, till the sun goes up. We don't stop, no. I see you looking at me, but you don't stand a chance, you see. You don't know how to act. I'm looking for classic. Can you please take a step back?
Good morning, Brandon. How you doing, buddy? It's been a minute. How's everybody doing on this fantastic Friday? So Bitcoin tested that key swing. That is going to be last week's low. We want to see if the buyers want to step up there or not. Only time will tell, of course. We don't know what will happen today. But if you want to be a buyer on Bitcoin, we've been talking about this level all week long. We've actually been talking about this level since last week. So, I mean, it was the level to watch. Now, I'm not going to lie to you. They made it very difficult last night to be a buyer there. As you can see, you had a lot of chop. So it was difficult. But there is a longer term trend line underneath price as well. It's going to be your upswinging trend line. That's a key trend line. So there was another area to watch under. Obviously, trend lines can be very subjective, but when you take them from the swings, boom, boom, it's pretty objective, right? I mean, the only thing that would be different would be whether or not you're looking at it on log or whatever, but it seems to not matter in this scenario or in this case, right? So it got down there. That's about where I would want to be a buyer. We lose that, then something else is going on. Then this starts to look more like a failed breakout, because that is the trend line that needs to hold price in order to call this a breakout. So we'll see if the buyers step up here at last week's low today on Bitcoin or not. I mean, it could take all day for it to happen. It could take multiple days for it to happen. But ultimately, that's the price you want to be at least looking at to be a buyer. Around the horn, in the other markets, you've got the NASDAQ and ES both currently trending under intraday lows, but both making fresh all-time high today. So in today's ES and NQ ranges, you have a fresh all-time high, but you currently have a red candle on both assets, as that just means you're trading under the open. No big deal. Are the risk markets ready for a pullback? Well, if we look at the VIX, which we're not, I am, but you're not. Let's go look at the VIX. You can see that we made a pretty good push yesterday, but ended up giving some of that back. So, and then you ended up closing above the previous day's close. You don't typically want to see that. We want to see continuation lower. You don't get continuation lower until you get a close lower. So we did get a push lower, but it closed higher. So key area of support here on the VIX. I don't see why, but it is. It's just because the risk markets are at all-time highs and people are taking profits. It's as simple as that. People take profits at all-time highs. In other news, we were watching gold. I said, if you fail to break out, look for the short. If you break out, look for the long. That has been a fantastic short. If I can find it, I don't have it over here. Here it is, GLD. That's what I traded anyways. You can see pre-market, you're almost all the way down here to the bottom of the pattern. It's just a large time frame triangle taken from the 4-hour and as well taken from the line chart. So either way it goes. I mean, we only care about closes on this channel or in this community. We don't care about wicks really, but closes are what's important. So it doesn't matter what you look at here. You got two triangles. You can see a clear failed breakout here. So once we got under, we were watching for an area of resistance yesterday, but we didn't get it. Price was so weak, it could not trade up there. Here is that area of resistance we were watching. We opened the market, we traded up. We set a high on the day, and that's as far as you could go. And that high held, and here you are this morning breaking down. Now, I don't want to take fresh shorts down here because we can bounce. And it could take a lot more time to fill in this overall pattern. But there is a measured move here on the breakout of the pattern. That's what we're really paying attention to while we're trading inside of this. It can be choppy, so you have to be careful. You have to be quick to get in, get out, things like that. But we're looking for the breakout, whether it's to the downside or to the upside. Since we failed on the upside, we kind of want to see it break down with some steam. If we get the breakdown with some steam, we're going to put on a lower put. We're going to look to buy like a 300 strike way out in time to give it enough time to play out. So we'll see what happens. But if you break down out of this trend line, there is no reason why we could not revisit May's lows. That's what we're watching on GLD. And then for the rest of the alts, yesterday we had a pretty good down move. We broke down from Fartcoin on Wednesday, and then we just seen downside continuation yesterday. And we have traded right back down to July's volume weighted average price, and that is where prices currently bounced from. We don't know if it will be able to hold this area or not, but this is a key support, in my opinion, for Fartcoin. What you can see yesterday was a pretty significant move lower. You got most of that, like while we were live, it was basically chop city. It really didn't do a whole lot while we were live yesterday. So the majority of that move came after the London session, or just before it. I'm sorry, because you really didn't do anything else. It wasn't until late in the session yesterday where we broke down out of this consolidation, and you didn't quite get a measured move lower. So it does look like, obviously, that prices are weak, right? So this formation, you would be thinking, well, we need a short here, right? This is where we were looking for a short. And I would agree with you to an extent, for sure. I would agree with you to an extent. But you can see here, we're currently testing this. So it's not quite set in stone yet whether or not you've lost that 21 exponential. And it looks like there's probably a trend line here that hasn't broken out yet either. This was the old trend line breakdown, failure, and big move up. Right, but now you would have to use this. So there is potential support down here. It's Friday, so we're not going to get crazy. I had a good week, so I'm not looking to give that money back, but I will be looking to take maybe 1 or 2 attempts on something. I just haven't found the setup I like the best yet. I kind of like Bonk, but Bonk is still in a large time frame consolidation. It is failing to break down. And that means something to me, because it's basically telling me the sellers are more than okay to sell Bonk at 36.75, but they are not loving the short at 32.34. So they're backing off for whatever reason. They're failing to get continuation. Now this could be the first time we get it. So you are trading under the weekly VWAP. You're retesting it right now on a 4-hour period. You can see you've not been able to close a 4-hour candle above it. And this is a key swing low right here. It is not only a 4-hour key swing, it is not an 8-hour. The 8-hour swing high is higher. So it is just a 4-hour. I thought it was both. I thought it was both an 8-hour and a 4-hour swing. It isn't. It's just a 4-hour swing, but that's currently where the shorts are picking up here. You can watch the close of this candle, but your stop would have to be very, pretty wide. So we're an inside candle, and on the very small time frame line chart here, you're holding a trend line, but I don't honestly think it's going to take much to break this. But this is the problem. We can break it and look like it's going lower and then trade right back up, right? It could be very choppy. Today's Friday, so I don't expect a whole lot. As far as news, there's not much. There's not much news. But I like the short. I do. I mean, if we can break down and hold it and hold resistance at this green line, I like the short. And we'll see if we can get downside continuation today. I no longer like the short if you're trading above these swing highs up here. So essentially, if you put in support down here and you start breaking out above this stuff, then there's a chance you can come all the way back up to here. So I kind of want to see this area hold 3509 as resistance. It's going to be a difficult scalp. This would be more like a long-term position trade. You would have to take this on light leverage, small position size, get your stop wide, give it time to work, right? We just had the bell. Oh, and the Intel trade, I exited it yesterday, or before we got into this area of, well, not, it wasn't an area, it was earnings. That trade did nothing for a long time. So whenever that happens, if I'm not getting continuation, I don't want to hold it. We've been in it for a long time and it's been trading sideways here. And then you had earnings yesterday. Earnings has made it fall. If you're still holding it, you shouldn't be down really, really big because it's a slow mover. And there's a lot of time on it. So you might not have to exit it. You just need to see buyers come back in and prop it up. If you get under this yearly opening range, I don't like the long. If you get back under this, then I would expect Intel to trade red for the rest of the year. So you're at a very important level here, so you don't need to freak out too bad just yet. But I hate trading through earnings. It's an absolute gamble. Because even if they do good on earnings, markets can sell off hard. We don't really know what's going on there, but it's been in this range for all year pretty much, right? For the majority of it. So yeah, it's been a no good trade for a long time. But a lot of people want to own Intel because they think it's a good company. And if you want to own it down here at these prices, you can, but you're better off buying shares, not trading options. It's cheap, so a lot of people like to trade it. But yeah, it's getting killed today based on earnings. And then our FXI is back down to the green line, so you should have taken profits on that already. We were looking for a tag of this green line. That was our profit target area. You were up there for multiple days. So if you're still in that, you might want to really think about getting out of it before you give back your wins, your gains. All right, with that being said, let's get back over here to the alts because this is what we're really focused on today. Now, the problem is today, your Bitcoin dominance chart is pushing lower. So I like the short as far as the way the chart looks on bonk, right? It looks like push lower, and then this would look like a rejection here. We would want to see that lower push. But here's the problem. As long as dominance is pushing back to the downside, your alts can be strong. And you are going back into the trend. The trend is down for now. Or, it's up on the week, but it's retesting like if you look at this as a 2-week trade or a monthly trade, you're down, right? It's down. Your trend is down for the month of July. This is just a consolidation correction in the downtrend. So we were looking for it to find resistance and roll back over. And if that happens, then alts are going to get strong again. So it brings up, you should be a buyer at support, not a seller. And since bonk has been failing to get downside continuation, it's not a great short. You know what I mean? I like it for the short. It looks like a short, but the sellers can't get continuation lower. And I don't want to buy it up here. But, let's see what it does. That's all we can do. Trading back into that weekly area there, that is your volume weighted average price. So if the sellers are going to get downside continuation from yesterday, then this is where I would expect them to show up. So to make it simple, I guess, if you're trading above this, leave it alone. It's probably going higher. As long as you're under it, we can look for shorts. Buyers are going to be looking to buy it around this area. So I'll leave it up to you to decide on what you want to do with it. Right? Bitcoin is down today, but we're looking for Bitcoin to hold support here. So if Bitcoin starts to get bullish today, if we see the VIX continue lower like we're expecting it to do, risk markets potentially find intraday support, I think Bitcoin could hold. On the CMEs, you lost your volume weighted average price. Let's go look at that real fast, because that is important, because we haven't been able to do that. That's the one thing that we have not really been able to do all month long, is lose that and then hold it, right? Well, I guess you did lose it multiple times and then regained it. So yeah, you really haven't done anything on Bitcoin as far as a breakout. You're still very choppy, still very range bound. And this kind of trading sucks. Usually, it's very easy to get chopped up unless you know what you're really, really doing. But I hope everybody's had a good week. I really do. Let's see if we can't get positioned on one of these things. So I'm going to chance the short, knowing that it's against trend. So Pingu here is actually into a support area. Let me see what that is. Okay, it's the last 4-hour support. So we lost. Pingu looks like it wants to go lower. Next area potential support's going to be 0.035967. That's a 4-hour support. You're losing. It's going lower. Bitcoin dominance might be bouncing, so we want to take the short on bonk before it gets momentum here. Why are you filling me like that? I don't want to be filled like that. I'm going to go into it with a very small position. I'm going to lighten my leverage up a little bit. I don't want to lose my gains that I made this week. We made pretty good money this week. We booked almost 2,500. All right, so I'm just going to take it here and see what happens. This is a swing that it failed to stay above. So as long as it's below this right here, I like it lower. It's your old 4-hour support. Resistance is up here. So that's kind of the range you need to break down and get continuation back to the downside. Your intraday VWAP is all the way down here, so buyers can step up as low as here, right? So this is going to be more like a breakdown type of style, because we weren't able to get in at the highs, obviously. And this isn't really a breakdown either. You're still inside of a larger chop consolidation. We're seeing a little bit of momentum to the downside on the NQ, on Apple, on the IWM, on Microsoft, and Nvidia. You're also pushing lower on your advanced decline line. But can it hold it? That's the big issue. When you're in a bullish market, the shorts are never able to get continuation because the buyers are stepping up. The buyers are buying lows. If you want to be a buyer, all right? That is the trend. That is the trend, and we want to be following the trend generally. So let me see what Doge is doing. Doge is at a support area. If you want to get long Doge, you could get long here. You just liquidated this swing low. So if you're going to hold this area, if it is going to hold, this is where you'd want to be a buyer on Doge. A lot of stuff's going to look like that. Penguin is the only one that isn't. So Penguin might just be looking to liquidate this swing from yesterday. You can see that trend line encapsulates all the wick highs, but if you put it on the line chart, it's much lower. And that's essentially what caught this swing high up here. This was resistance till you broke out. Here's the breakdown. So this is going to be the area that the bulls need to break out back above in order to prove that they have control of it. So even though we're pushing under here, it doesn't mean it's going to fail, right? It's a 4-hour swing. So you're going to need to wait on 12 o'clock. That's when you get that close. Bonk is failing to trade much under the last 4-hour open. So all morning, it hasn't been able to trade under this 4-hour open much, right? It hasn't been able to get continuation under it. So let's see if it can break down right now. Because I can be a buyer here if it holds. I am already in the short for the breakdown, but I can quickly get out of that and switch the position. Since I'm taking very light position sizing and light leverage, my fees are they're nothing. Like, I'm a VIP level 6 on weeks, so if I'm a taker, or I paid like just a little bit. If I'm a maker, I don't really pay anything. So to get in that trade was $1. To get out of it will be $1. Nothing, right? It's literally nothing in terms of fees. That's why I love these alts so much, man. They move so good. You can use very little small position sizing and make so much money. Just make a killing when they trend, when they get going. When they're choppy, they'll chop you to pieces. IWM is falling pretty hard. Let me pull up IWM here on the larger time frame chart just to see what's going on, because it did look good, but it's looking like a failure. Like, this is a failure, but you're coming back into this yearly opening range down here on IWM. So if the bulls are serious on IWM, this is where I would expect them to show up. If you lose this area again, well, then then it's going to look like more range bound, right? More range bound. There is a large trend line that one can make here. You're nowhere near it though. Let's see what happens on the small time frame trend. You're losing it. But you haven't lost it yet. You're just in the process of losing it. If it holds the breakdown, then we would expect the sellers to come in here. So, yeah, I don't like this momentum right off the bell, but that really doesn't matter sometimes. The bulls have been stepping up like crazy. The bears have been trying to short these markets forever. You know what I mean? They've been literally trying to short them and get them going, and they just can't seem to do that. So ES and NQ both retesting intraday VWAPs. Let me see what's going on up here. Is Nick? Oh, Nick, you're in here. Okay, never mind. Okay. All right, I see. Okay, nothing important. I gotta check my alerts when I get them because someone could be telling me that my mic is muted or something like that because I'm not the best streamer in the world. Here we go. Fartcoin. We're going to see if you can break down here. This looks good for the breakdown. Get that downside continuation for the first time. And bonk is breaking down. So this is good. This is good. We want to see this, but we want to see it hold. There is a measured move to take from this because this is a large consolidation range. So if it could break out of it, I mean, it's going to be difficult to get under that, right? Very huge range. And you're right in the middle of it today on a Friday. Yay! We've been a seller up here every time except yesterday. I didn't short it yesterday up there. But every other time it came into that level, we were sellers. So it's nice that the sellers were able to jump back on it there. Let's see if they can hold it here. So what would a measured move from just here to here be? Okay. So we could look for a potential move down to the yearly opening range. If the sellers are able to keep 30-minute closes under that 100 exponential moving average. Remember, right here is where buyers are going to show up. You will see some price wiggles here, more than likely. I should have taken a bigger position, actually, by lowering the leverage bar. I should have actually taken 1.5 times a normal size position. It just makes it, because these things move so much, it just makes it a little bit easier to stay in it when you're down on a trade. To see if ultimately it comes to life. Like right now it looks good, but the buyers can show up here. This 30-minute candle could be a trap. So like when this candle closes in 11 minutes, you could open a fresh 30-minute candle, smoke the low of this candle, and then head up and put in a bullish engulfing. So we're going to pay attention to dominance and see if it can, what it does. Like Bitcoin is under 2% down now. So as of right now, as long as it stays negative 2% and under, then the bears are in control of the market. If Bitcoin is unable to keep that, dominance is at 0.72 down. So for the shorts, we want to see dominance go up, and if you're long, you want to see dominance go down. If you're long alts, so like if you're buying this zone right here based on the intraday VWAP, then you want to keep an eye on dominance and you want to see it continue to tick lower. They don't trade, it's not a 1-for-1, but you're losing your 30-minute here on total 30, total 2 and total 3 is, it hasn't even retested it. So for the very near term, you can see where the sellers are showing up. So we could get an extension here and just see. So about 960 bill would be max on the downside. Yeah, okay. So you wanna lose the shorts if you get continuation today, like later on into the day. You wanna definitely be out of the shorts if your total threes in this area, 960, 970, because that's gonna be about the extent of the move. That's even if you get it. That's even if you get the move. Bonk is still up 1% on 1.6% on the day. So we expect price to wiggle here. See the volume increasing here coming into it, but not really at it. There's not a lot of volume picking up here at the VWAP. This is where I would expect to see better than average volumes if buyers were buying it. I would want to see big volumes here. Since there isn't any volume, it doesn't seem to be like there's anything happening down here. So price can go back up just from that reason alone. Like if you've exhausted the supply already. Don't try to do the scalping strategy. It worked pretty good this morning. A couple times I got a couple little ones in, but it's not going to work after 9:30. Not until like 11:30, 12 o'clock, because it's a reversion strategy. You don't want to do reversion strategies when you got an influx of fresh, big volumes. And that's generally when we see expansion. And since we're bullish and range bound and the VIX is low, a lot of range bound moves. No continuation. Its continuation is what we need as trend traders. Your NQ is pushing back above VWAP, so that's going to be not great for the sellers. All of your Apple, Microsoft, and Nvidias are all back to up on the day. ES pushing. So buyers might be controlling the market again today. You did get into negative territory on the ADD, but you have stalled out at negative 34. Dominance holding negative 75. Zero spot 75. So we could be printing a bullish engulfing candle on Bonk. Look, you're back inside of this low. As long as you're inside this low, you're threatening to go back up to the open. Back up on the open, at that point, you're bullish engulfing. Once you take out the high of the next candle, but it's so easy to do in 2 hours. It's a small range. Very small range. We expect price to be wiggly here. This might be it right here. Let's see where it goes. Where she goes. We don't need that. We know the volumes are going to pick up here. We know this is an area where price is going to struggle a bit. What's up? I was on the gold short early, hit targets overnight. We'll post in the Discord. Good stuff, Nick. Good morning, says Peter. Good mornings to everybody. Good morning, YOLO, said Nick. Amsterdam's in the house. Janet's thoughts, good morning. Intel is effed. Yeah. Intel sucks. I don't know what its problem is, but where would you expect resistance to short fart? Okay. The weekly open. One spot 4193. The problem is you're not up there. I mean, and I don't know that area would hold. That's just, I mean, it can hold right here. It can literally roll over from where it is and start going lower. The biggest level, the biggest time frame level that you have right here is going to be your weekly open. So as long as Fartcoin is under one spot 4193, it's red on the week. Today's Friday, but you're still trading inside of this, so you could be at support right here. So if we look at this in context of last week, which that's really all we got, as long as this area holds, then the sellers have it, right? This is kind of like your line in the sand here. So it could literally roll over from here. But the sellers haven't been able to get downside continuation. Yesterday was the first time that you really got a decent move lower. Right? So here's your daily chart. The last 2 days, the sellers were able to do something, but every other time they weren't. So it's a difficult short here, but if you're going to get downside continuation, I would expect it to come at least at the very minimum from here. That's your weekly open. You're still red on the week, and it's also the pretty close to the midpoint of yesterday's range. So that would be the best area to short. So that's why taking a short right here is so dangerous, because the real sellers, they're probably waiting up for this up here. The sellers that were involved in yesterday and the day before's move, right? These sellers. Because that's where the real short opportunity was. It just happened on the only day that I didn't do a public live stream, but I got to do live streams for my, for my premium audience as well. So I just tossed one in the midst, right? Just in the middle of the week, try to give them a little bit of a chance to get in on it. And that was the day where this short actually worked. And it worked really good. So these people, they're in good shape. And as long as price is staying under this weekly open, they don't have to do anything. Yesterday, you got that a little bit more continuation. So anybody that shorted yesterday, they're going to be watching this level as well. So to short down here this low, like, you would almost need some news, like a driving force, a reason to be a seller this low, other than just that technical level. Now that technical level can hold. It's the weekly midpoint. First time you got up above it, it couldn't hold it. So it could hold. So just watch these two areas. You don't want to be a seller anywhere else. One spot 3768 or one spot 4193. So if you're shorting it right now, you're going to use a half of a normal size position or smaller. Because the trade idea, unfortunately, gives us two areas. So we have to be willing, we don't want to lose more than 1% of our total equity on the idea. Right? So to do that, we don't know what price will do. The only way we can do it is to just go ahead and short Fartcoin now with a smaller position size. As if you get the larger breakdown, you can always add to the short. But if this doesn't hold, like if you look at this last close, like it's right on it. This candle might pull back to here, and then it looks like it wants to rip. So this is going to be a liquidation point. So your stop would have to be above that. And then if if price is trading above this, then this is the next area. So that's all we can do as traders. We can't see into the future, and we can't predict what price will do. We can only look at areas on the chart where we want to do something. Right now, it's weaker than it is strong, and it has been for the last 2 days. So that's good, but that doesn't mean that price will stay weak today. So all we can do as traders is mitigate our risk. That's all we can do. And the best way to mitigate risk when you have a trade idea, the trade idea is Bitcoin has been weak for 2 days, and it lost its very near term uptrend up here. So if there's going to be downside continuation, because you did close under the 21 exponential on a daily time frame, then we would expect that to happen here or here. So all we can do is we can attempt to do it here, and then, mitigate that risk. So that way, if we're wrong, we're not eating a huge amount of money on the loss, and then try to get it again here. So that way you're only looking to lose a total of 1% on that trade idea. So it's going to be up to you to disperse that money management in a way that allows you to get into the position, but in a way that you don't lose a lot of money if you're wrong. There is no analysis in the world that'll tell you what price will do. Nothing. We can anticipate what it'll do and mitigate our risk if we're wrong. So I will take the fart short with you right here. Let me get you up there. So we're in the bonk short. We'll take the fart short here. We're going to lower our leverage. We don't want 20x because fart coin moves a ton, because we're going to go into it with a couple $100, all right? So we're going to go in here and we're going to short here. Now we know it can go up here. We know it can because as of right now, it's green on the 4-hour candle. So as long as it is, right, as long as it's green, then the next area is here. That's the swing high. So as long as this candle stays green, the threat is it's going here, right? And you can see it doesn't take much for your loss to get big on Fartcoin. But here's the good news. If you're right on the short, if price does continue lower from here, then it stays going lower for like 2 or 3 days. That trade is going to be a few $100, right? So you're going to risk, I don't know what you're risking, but I'm willing to risk $100 to make $200. That's all you can do as a trader. That is it. That is all any money manager does. We just manage our risk. We don't predict what price will do. It could be choppy for the rest of the day. It could go up all freaking day. Or it can go down. Those are the 3 things that it can do. And there's no analysis in the world that will tell us what it will do. Nothing. But using objective points to take entries. So like objectively, my entry is this current 4-hour candle's open. So if we get continuation lower, like this candle or this candle, if you shorted it at the open and you got continuation, then you're going to be positioned good. If it does the opposite, you're going to be positioned bad. Right? Look at that up candle. So you just have to have a point of where you no longer want to be in the trade. Because if you're trading above this key swing, then the next area to be under threat would be this swing. Right? And this candle opened at 4 o'clock yesterday evening, 4 p.m. Eastern Standard Time. So anybody that got short Fartcoin after 4 o'clock, their stops are right here. So if you're trading above this, then there's a threat. It's going up here. And as long as you're trading above the open of this candle, there is a threat that it's going here. So it's up to you to decide where you want to manage that risk, right? It would be nice if there was an analysis that would tell us what it was going to do. Of course, you would be rich. Everybody would. Everybody would be rich if there was some kind of analysis that told us what price was going to do. This is a big support zone right here. This is the monthly VWAP. So I find the short here not the greatest idea. The better idea for the short was up here once it showed you that it was potentially breaking down. This was a breakdown candle. So us taking the short here, or actually we got in up there, but we had a reason for the trade. I don't remember what that reason was, but it was a good reason. That's a better trade. I mean, it probably wouldn't be if it got back up there, because then everything's different. The whole formation, all the structure is different. At that point, it's going to cause people to do trades for a different reason. Now, candlesticks are good for one thing and one thing only, to show us what price has done, not where it will go. That's all we can do. So we'll see what it does. The bonk short is still working out a little bit as we're still trading under the open, and we've liquidated this low and not retreated back to the open. So that's kind of good news, right? But still, it's at a support. It's at that intraday VWAP. This price action looks better that the intraday VWAP is going to fail, right? Because you did get a bounce, but you're coming back. So we kind of, for the short side, want to see that. What we don't want to see is a higher low from here and then an expansion and a higher high. Because each time you get that, that means there's a chance that you're on the wrong side. And it also means that the buyers are stepping up because of this. So the more time that it puts in failing to break out, the better we are. Right? So we just have to give it time to play out here for something like that. We can anticipate what price may do. But if it starts making higher highs and higher lows, then we could be in trouble here, especially if you get something like this. Because as time goes on, you got more and more volume coming into the markets. More and more people are seeing the fake or the failure to break down. You see what I'm saying? It allows time for people to make decisions. Your patient traders, they're on the sidelines right now. They want to see what this is going to do. Right now, they're thinking to themselves, well, the shorts from up there, they've got it, but they want a deeper move. They don't want just that little bit of a move right there. They're looking for a bigger move. They're looking for a move down here to the weekly open. So right now, the market is basically figuring out who's going to win down here. That's why you go into these consolidation periods. A rule of thumb in technical analysis is it's better to look for the position or the position at the top of the range for the break in the direction of the range. So like if price was trading down and then went into consolidation, then down is where you would expect the break. But here's a point where you went down, went into the consolidation, and then broke to the upside. That's because after it failed to break down for so long, new traders come into the market saying it's probably a long because it's failing to break down out of this consolidation. So they come in and they hit the lows. It's just, yeah. It's not easy, guys. Your competition is the smartest and richest people in the world. That's your competition. The smartest, richest people in the world. You are attempting something that not many people would attempt. To go against the smartest, richest folks there are. Look what they're doing on the NQs. Your NQ's back to bullish on the day. The trend is up, so this is what's been destroying shorts. People are trying to call tops on these markets. Trend followers are buying these markets. They're buying daily lows. They don't know where the daily low will be, but they can get a good idea where it might be, right? On Fartcoin, we are neither at the daily high or the daily low. Well, actually, we're closer to the daily high than the daily low, I think. Yeah. So that's your daily high, that 4-hour wick. That's your day high for right now. This is your day open right here. But it's only the high for now. So on the daily range, you're in this right here. There's your day low. There's your day open. There's your day high. So it's hard for buyers to buy the daily high, but they will if they think it's going to go up. They absolutely will. Buyers buy high. It's a misconception that markets do buy low, sell high. What happens in reality is people are buying high, selling higher. All right? You've always heard buy low, sell high. That's the exact opposite of what you should do. Right? If you think about it, if markets are making fresh daily lows every single day, why would you buy that? Because you're going against the trend. If the trend is lower lows and lower highs, you should be shorting the lower highs, not buying the lower lows. And you can see it on the chart. I mean, right? So up here, buyers were in control of it because it was making higher lows and higher highs. So buyers were buying higher. Right now, that trend has changed to where sellers are selling lower. They sold it here. Then you got expansion lower. Then they sold it here. So the sellers are selling lower. So yeah, if we're going to be a short, we're in a good area, right? We're in a good area. That's all technical analysis does for us. It shows us if we're in a good area or not. It doesn't guarantee us making any money. That's why we manage our losses, so that way when we are right, those right trades, they blow those losses out of the water, right? If you only lose $30 on this trade, there's an opportunity to make hundreds. So that's all we do. That's all we're doing. For right now, we're winning, but we are at an area where it needs to break. Why is this? Wait a minute. Why was I saying the intraday VWAP was down here? Was I looking at a different asset? Yeah, bonk is where the intraday VWAP is. Okay, so Fartcoin does look better ultimately for the short because you've lost your intraday VWAP. Not today, but yesterday's. Where's the weekly? It's Friday, so here's today's. Yeah, okay, so you haven't lost today's, but we know that it would be underpriced because it's been going up all day. But the weekly we've lost. This is July. So for the month, this is where the volume is basically, the longs are in control of the monthly range as long as price can stay above this. And on the monthly range, well, we are right there. Oh my gosh, this is actually a very bad place for a short on the monthly range. Oh my gosh, we're probably going to get wrecked. You got the VWAP here and the monthly midpoint to contend with. The thing about those monthly buyers, those people that think July is going to close up, this is where they want to add to the positions, right? If they think the uptrend's going to continue. If this 4-hour candle fails to close under this, my bias will change. My monthly bias is up. Objectively, it's up. As long as price is trading above this, right? That's how my biases work. I let price give it to me. So price right now is still objectively up on the month. Look at this. This is what happened the last time price came in this area. So the bulls had the momentum in the first part of the month. It does look like that has changed, doesn't it? So the bulls lost the momentum up here. The bears had the momentum and they had it for only the last 2 days, and look at the push they got. This is a big area here. If we lose this zone, you could see a pretty significant move lower. But losing this zone is going to be difficult. So keep that in mind, because buyers, if they think that this is going to keep going up, they're going to load back up here. Anybody that bought July's open, anybody that bought this area, they want to defend this. If they lose this, then they will probably get out. Right? So this is going to, and it's probably no, like, it's Friday of the week. So for the week, nobody really cares about this week's range anymore, because it's Friday. Going into the weekend, there's not a lot of traders that trade the weekend. Not a lot of pros trade on the weekend. They might have bots and algos that'll trade on the weekend, but they're not at their desks all weekend. So they really don't give a crap about this weekly range. It's the monthly range for them that's important. Especially this month, because it's a breakout. They're breaking out. You are breaking out. So I made a lot of money this week, so I'm okay with holding the short just to see if these shorts that just showed up have the balls to push it lower from here. If they don't, if the sellers back off here, then we're probably going higher. And then if that happens, like, which we're getting ready to go into a new month anyway, so this month is pretty much toast. Also, though, this could just be profit taking, this move lower here, because we're so far into the month's range at this point. I mean, as a pro, I would look at that and be like, yeah, that's probably about as good as it's going to go for this month. So let's go ahead and take profits. Let's close that position down and wait for August. And then we'll make a decision in August. That's probably what spurred on this down move. Just profit taking. So anybody that missed these 2 days, they're probably going to try to short it today. But they're in a really bad place. Like, support has been holding here for hours. Hours. The sellers are winning here. Remember, the more time it spends chopping real close to the support, it's also a good rule of thumb if you're long, like if you're buying this area, you gotta see that it hasn't been working for a lot of time. So maybe it's not the best place to be a buyer, right? Yeah, gold was beautiful. Gold is just down, down, down 3 days in a row. The breakdown on that larger pennant pattern or larger triangle will be that there's a larger measured move to be had from that. That's going to pull in a lot of people. A lot of people are going to be jumping on GLD soon. A lot of people. There's a measured move down to May's low. So there's a lot of points to make in that. So you don't have to rush on that. Don't be selling it today. Selling it right here is not advised. Wait for the breakdown, then be a seller. And even then, it's not guaranteed. But there is a measured move to take from that pattern to the downside. what we got going on here with Fartcoin. Yeah, it's still struggling. It looks okay, though. We're getting a lot of time. Not really. Just a few minutes of time have passed. BTC broke down. Aught's obviously gonna dump. Okay. It's broke down from what? What's it broke down from? Let's look. Okay, so it's broken down from the weekly range into the area that we were watching. On the month, Bitcoin still looks great. Bitcoin is still ultimately bullish. On the month, you're still very bullish. So this isn't a breakdown. You haven't broken down out of the breakout yet. This is not a false breakout yet. Today, yeah, it broke down. So today, I guess you would be right. You've broken down today. Because there's the open. Right there's the open. And they hammered it. So the Asian session hammered Bitcoin today when it opened the daily range. But it's now consolidating. And it's been consolidating at the area where I would expect buyers to show up. Because if you look at the weekly, as far as targets go, there is nothing else to go get, right? There's nothing else to go get. As far as liquidations, there's small time frame lows to go after, like a 4-hour swing lows down here. And of course you could get down there, but as on the larger time frames, Bitcoin is still very much structured up. And as far as liquidity goes, there's a lot more to the upside than there is to the downside. Look at all this up here. Look at all these white hots. There's 4 white hot areas to go after to the upside. There's 2 to go after to the downside. 112, 113. 113 would make you look like a false breakout. This is 113. So yeah. And this isn't set in stone either. This doesn't mean that there is that much liquidity down there. This is an indicator. You guys need to read that. It predicts price levels at which large-scale liquidations may occur. These are not real liquidation points. A liquidation event when a trader's position are closed due to price fluctuations and our margin account balance is insufficient to cover the opening positions to prevent further losses for both traders and exchanges. Most exchanges offer a liquidation level, which is the price at which leveraged traders will be forcibly closed. We know all that. Traders who can estimate the liquidation levels of other traders may gain an advantage similar to understanding high liquidity in the order book. We know where the liquidation levels are. We don't need an indicator to tell us that. So where does this indicator say the liquidation level is? 114,347. So where is 114,347? Right there. There's really nothing there to liquidate. There's no key swing low. There's a key swing low here on the hourly time frame. Really nothing on the daily. So that would be a midpoint of this candle. So let's get rid of this. this candle right here, 113,691. 113, or the first one is 114.3. Oh. Yeah, the trend line. They're just picking levels and throwing that up. Like, yeah. I read it somewhere. It literally says they get it from old price. So they're taking those liquidation levels from old price ranges. Open, high, low, close, and midpoints. But we know liquidity resides under every single key swing low, especially on the higher time frames. So every key swing low. So the next key swing low is here. So there's a key liquidation point. This was a key liquidation point to the upside until you liquidated it. This will be the next area to look for. Liquidity. It's under every single swing low and swing high. That's what traders use to put their stops, right? They use swings. I'm long here, so my stop loss has to be under that swing. I'm short here, so my stop loss is over that swing. But yeah, it broke down today for sure. On the larger time frame, it's still in the range. So this could be a bear trap because it's the first day. Today is the first day where you're actually getting an opportunity to close under support. This was a bear trap, but the buyers just failed to take it higher for whatever reason. So now we could be setting in a bear trap. We won't know until Monday, unless Saturday and Sunday both have lower closes. If you get that, then it's more or less a near-term trend is down. But we already know that. The near term is the week. So as long as you're under there, you're down on the week. That's why sellers are, they're going to try to short it. You're down on the week right here. Let's see if we can get downside continuation. If you look at our trades, both of them are up for now. We're getting that push. That's what we want. We never can predict that, but we can definitely manage our risk at that price. So things are working for now. The sellers got it for now. Today, for now. I want to see if they can get a deeper push. If they can do that, then hell, we may be able to get a push all the way down to the open of July. If that happens, things are going to look much, much different for alt season. You know what I'm saying? That will definitely drive price for the near term. If you get all the way back down to July's open, then that's going to suggest that alt season is pretty close to done. Because look at what you've done here. Month of consolidation, and then you got a higher push, but you never liquidated May's range. So right now, this looks like a failed breakout. Why? If alt season is here to stay, why buyers not buy May high? Right? So yeah, it will change a lot of things. Look at hype. Failure. Look at LPT, couldn't even do shit in July. So LPT, no alt season. Jasmine did break out above June, but failed to break out even above May. So no alt season here for the last 3 months. Or at least not on Jasmine. Not on W either. Bonk, yes. Alt season for a month. Well, I could argue that it's been here for 4 months. And it still looks good. Buyers are still buying highs. You're still in the context of this monthly trend. You're still well above support. Well above it. That's going to be way down here. But it is looking like a failed break. So the sellers have been right on Bonk at 36.81. Right? We have been right at 36.81. But we haven't gotten the breakdown yet either. This is the range. You have not been able to close a daily under daily support. Not one daily candle. You haven't been able to close a daily candle under the weekly open either. That suggests buyers are soaking up these sells. So Bonk is still structured bullish and can still break to the upside. If the sellers don't get continuation today, I would argue that you're about to see another breakout on Bonk. And then going into the weekend, we may be buyers on Bonk. Today will be important for Bonk. Bonk needs to make a fresh daily low. It hasn't been able to do that since Wednesday. So it needs to do it today. If it doesn't, this is going to be threatening a breakout to the upside. Bitcoin is doing that, but Bitcoin loves, and I mean loves, to put in bear traps. So this could literally be a bear trap. Look at this, guys. This is a breakdown. Support. There's your breakdown. What happened after? Boom, boom, boom. Straight back up. Now that's support. Breakdown. Boom, boom, boom. Straight back up. Breakdown. Boom, boom. Straight up. Oh, breakdown. Boom, boom, boom. Straight up. I mean, that's what I'm saying. Like, this doesn't mean anything. If you get downside continuation, that will mean a lot. But in the context of the monthly trend, it means nothing. This is a buying opportunity until proven otherwise. So we have to be careful. A lot of these favorites they're just literally, they're failing to get any like meaningful move lower. And there is a reason why. The reason is buyers. That's the reason. So we can be sellers and try to get positioned for that potential move lower. But on some of these, Bonk especially, the buyers are still threatening a breakout. Like, the buyers still have that. The sellers have done nothing on Bonk. Nothing. Barcoin's giving us some downside continuation, so that's nice. And the level that we took the short off of isn't based off of this midpoint. It's based off of the week's midpoint. Last week's, because last week was an up closing candle. This week was a failed breakout, and then it got downside continuation. So this was the level for them buyers to hold it on a weekly trending basis. So we're breaking down from that point. This looks good for us. It looks good for us. So I need to figure out a color coding system for my monthly and weekly bibs. Does this indicator do that already? We got Monday, previous week, previous month high, Monday mid, current year mid, weekly open, Monday low. And that was the weekly low, wasn't it? Until it was broken here. So you put in a fresh weekly low and got downside continuation. Boom. So that's good for the sell side. Okay. It's when you put in a fresh weekly low and reject, that's when it's never good for the sell side. So Bitcoin is currently trying to do that. So this was last week's low. So we put in, this is going to be the fresh weekly low. So if you break below this, this is going to be the line in the sand, because then you're going to have downside continuation, but it's only on the weekly range. So not really. It doesn't give me the previous months. I mean, it gives me the previous month mid, doesn't it? Pre-week high. Yeah. Previous month low, previous month mid. This is a great indicator. And they are color coded. But those are for the actual price levels. It doesn't do anything for mids, but I mean, the mids are there. So it is color coded. I don't need to use the fib because this indicator is doing it for you. The midpoint is what I'm using the fib to find. I'm using the 50% retracement. The 50% retracement is not a Fibonacci level. It's literally just the midpoint of a candle's range. So it gives you the previous week's midpoint and the previous month's midpoint. And in my opinion, that's all you ever need. This is a great indicator. So for anybody who wants this indicator, it is right here. Key levels, Spaceman BTC IDWM. Spaceman BTC is the guy that makes it, and 9.3 thousand people are using it. If you do that, you don't have to get your own levels manually. I can literally remove all 16 drawings because this indicator does it. That's a great find. Thank you so much for whoever showed me that. We're at the weekly open now, so very important key level. Let's see if the buyers can step up or not. Now we have a decision to make as financial advisors, or not as advisors, but as money managers. And the reasoning is simple. We're at a key level, right? We're at a very key level. And if we look over here, we can see that after a large period of consolidation, these are 15-minute candles. So I'm talking hours here. Sellers were unable to get downside continuation from the intraday VWAP on the ES. So this is a threat to the upside. Same goes for the NQ here. So you're threatening an upside continuation. That's not great news for our shorts. That isn't what we want to see. Now, we understand that altcoins do not give two craps about ES and NQ, but they are the most risky assets to trade in terms of risk assets. They are the riskiest. So if our normal risk markets are breaking out to the upside, do we want to continue to hold both of these shorts? Or should we take profits and keep one? Now we have to figure out which one to keep. That is how you manage your money. Because if the risk markets are breaking back to the upside, there is a chance that the crypto markets can still continue breaking down. We know that, right? There is a chance that that could happen. But since we can't know for sure, we have to figure out which one of these is the better one to hold. So Bonk is currently trading into its weekly open. Bonk is the one that is still threatening a bullish breakout. Not for the week, for the month. Holy shit. I mean, it's threatening a monthly breakout as long as you're above 1489. So it doesn't give me this month's mid, only last month's. Previous month high, so green. Previous month mid. Oh, let me get this settings. So we got daily, Monday, week, and month. But it's only previous. It's not current. And I don't like that. I wish it would just stay. See how mine stay? Like I can move this anywhere and the week open stays. This doesn't slide. I mean, it's got its benefits, but it's also got its drawbacks. Like for instance, it doesn't tell us where this month's mid is. I mean, I care that we're above last month's mid, but it's not as important as this month's mid. We're under it. So I say we close Bonk and keep the fart. That's what we're going to do. We're going to close Bonk. And we'll keep the fart coin short because fart coin is weaker than Bonk. Right? Bonk is much stronger than fart coin, as you're not even testing the monthly mid. But on fart coin, we're currently under the monthly mid. Yeah, right now we're under the monthly mid. But we'll close the Bonk short. No, it's gonna suck if that one ends up being the one to keep. But we can't see into the future. We have to manage our money. So since we can't see into the future, we have to make a decision. So I closed out the Bonk short. I'm gonna keep open the fart coin short just because it's weaker on a monthly basis. Okay? So if the sellers are going to be able to maintain that weakness going forward, they should be able to do it on a weaker asset. And that's what makes us profitable traders. things like that. Just managing your money. So we made money today. Now we can set a stop loss at the open of our trade. And we cannot lose money today. We made money today. We made $90. So we can set a stop loss here to lose 0%. So if price does find support and reverses, today will be a profitable day. Fantastic. That's what we want. It's not life-changing money, but it definitely grew the account. And that's all we are doing. That is it. We're not trying to make life-changing money today. We are simply growing the account. So we're good. We got paid today. We took a risk. We didn't need to, but we did it anyway, and we got paid. Our job is done. Yay! Nick says, gotta take kids to school. Oh, thank you for the stream, and good luck today, traders. Have a good day, Nick. Be careful on the roads. There's some crazy people out there. BTC broke down. Got it. Read that. UNH earnings next Tuesday, 7/29. Let's go look at UNH. Since our job is done, we can't do literally anything else. Either Fartcoin's going to break down or it's not. We put our profits at risk, but being very good risk managers that we are, we were able to close out the day with a small profit, and we're good to go. If we get downside continuation on Fartcoin, that trade will make decent money. Trading is easy. I love my job. UNH does have earnings coming up, my friend. You are correct. What was the other part of that statement? As I've already forgot. Might be a nice straddle options play. Okay, let me see. Give me a second. Let me pull up the old option chain over there. Oh my goodness, I never did close out that FXI. I thought I closed that out yesterday. What the That's all right, I'll close it today. It's still up. $64, I'll take it. I meant to close that yesterday. I thought that did close. But anyway, pulling up the options chain on UNH. That's United Healthcare. And they are asking about a strangle, which is not to be confused with, a straddle, which is not to be confused with a strangle. They are two different trades, kind of the same, but not really. Let's go ahead and define that for people that are curious. All right. Straddle and strangle options trades. Wait, let's just say define. There we go, as I peck on my keyboard like a crow. A strangle and a straddle are options trading strategies that involve buying or selling. So it doesn't really matter. You can be both long or short options for both of those trades. But you're selling or buying multiple options to capitalize on an expected price movement of an underlying asset, UNH in this scenario. It has been range bound for many, many days. So this is good for potentially both of those option strategies. You specifically want the straddle. So the definition for the straddle involves buying or selling an at the money ATM call and an at the money put. So going over here to our options, we have 0 days, which is in this scenario will not work. These options will expire today. The earnings isn't until next week. So you're going to have to select an options chain or an expiration an expiration that has light implied volatility. And the reason for this is implied volatility, or IV, is when it's above 50%, it means you're paying a large premium to put on the position. So notice how at the exact expiration where the earnings is taking place, your IV is 74%. I myself, now your rules can be different than mine, but I myself will not put on a straddle whenever the IV is up over 55%. 50% is about top for me, because you can still lose money, right? Because especially if you go long, which typically when you're doing a straddle, the most of the time that position will be put on with long option positions. So I would go down here to the 21 day, and you're looking for an at the money. It's got to be the same strike. So you can either do the 280-250s or the 285s. If you buy this and you buy this, that is not a straddle. All right, the straddle is this. You're buying both the call and put on the same strike. That is the straddle. All right. So it's whichever one you do will determine, or I would say price, right? For me, that's how I would determine which one, right? Because you are risking a lot of money here. You are risking a $2,700 on this trade. Now that's if price does nothing. That's your max loss. Max loss is $27.67. Will you lose that? Probably not. Probably not. You will probably lose money if it doesn't do anything, but it won't be that much because these options will still have intrinsic value. But anyway, let's go just add it up real quick and see. So we're going to pay what? $27.59 for this one. And if we go this way, we're going to pay $27.55. So just a couple cents. Really doesn't matter. So in order for this option to make money, what you need to happen is you need a huge move to offset the losses of the whichever side of the trade you get. So in a sense, this is a good asset to do it on because it has been range bound for so long. So the chances of you getting an outsized move are a little bit higher. So here is that range. You're near the bottom end of it, but it's still the range. It would be so much better if you were inside last month, but it doesn't really matter. You're still kind of in that overall range. You haven't seen a big move. A big move is going to make the implied volatility get jacked up. So that's going to help one side of your trade. So they don't care if it breaks down or if it breaks out. The way this trade makes money is when you get the move at the open, one of either your call or put is going to explode in value. And you almost need it in this scenario to double, because you're going to pay a premium. You're going to pay $27.65 to get in the trade. Now you could lessen that by going one expiration cycle closer, but I don't like doing that. Let's see what it looks like here. So still going to lose a potential of 2,200. So you're going to get about $400 for that extra week of time. Yeah. So it really don't matter. Yeah, you just need a big move. That's all. You just need a big move. A big up move, preferably. Let me see here. What are we at? 285s. Let's count. Let's just see how much. Okay, so you're a buck. So you're 430 at the outer edge of the range. 420s, 430s. On the put side, you're down $1. 360, 375. So you would definitely want price to go higher. But you would need a move. You're definitely not going to see a move that big more than, I mean, you could. Let's see what it does usually on earnings. That was not a very big move. That was an okay move, but still in the context of this range, not very big. You would need a pretty big move here. But as long as you know what your risk is and you're willing to take it, I like it because it's been in this range for a long time. It's not really good to take straddles and straddles whenever there is a large, like in a trending move. You don't want to do it, but in this, yeah, I like it. I'm not gonna do it, but I don't think you're going to get a big enough move to cover that losing side. But you might, because it has been winding up here. It has been wedging up. So this is definitely what you want to see. Let's see what the Bollinger Band looks like. So you've already started the expansion. That kind of sucks. But it's not huge. But you can see you got the expansion to the upside here. That's when the Bollinger Band started to expand. And then this downside move caused the expansion to go further. So that's why your IV is up as much of it as it is. If you go that earlier expiration cycle, this one, you're paying an extra 20% in higher premium here. You see that? 74. So you're going to pay an extra 20%. So I understand that the max loss is more if you use this strike, but it's only $400 more. It's only $400 more. You're paying 53% implied volatility for these options. So I would like this one better. I'm not gonna put the trade on, but I don't like these. I never had good luck with them, right? But sometimes they work. They work really, really good. Sometimes. And this asset, like this, does look good for it. So yeah. The closer you get to expiration, the better off you'll be. So maybe tomorrow, put it on like near late day. That'll save you a couple bucks on the premium. Because you're going to have to pay the premium to get in the trade. But yeah, I like it for a breakout. Either direction. You just need a big enough move to cover that losing side of the trade. And then, how tight have we got? Let's see. Do we got a TTM squeeze? Indicators. Volumatic, no. Session one, no. Relative volume, move phases, key levels, global. No, where is it? I don't have a TTM squeeze. There it is right there. It's not terrible. It's actually saying the squeeze play would have been best here. But it's still good, right? You're looking for a squeeze. That's what you're looking for. You're looking for a volatility squeeze. You're looking for volatility bands to go in a choppy sideways environment. And this is that. So even though you have started to break out of the squeeze to the downside, this could be a trap. It literally could be a bull trap or a bear trap. So if you do get a good earnings, you could see an outsized move to the upside. And that would cause that volatility spike. That IV would definitely explode in value. So those premiums that you paid would likely, this trade would likely, I mean, it's a good trade, I think. Even if it doesn't work, it's still, this is the kind of structure you want to see for that specific trade. You're still squeezing. You haven't broken out of the squeeze yet. And this could just be a trap. Lure those people in to get those puts. Yeah. I like it. I like your idea, man. I like it. It's a little bit too risky for me, though. Too expensive for that account. That account's that would be too much of a loss for that account. I could put it on my main account, but not the small account. It's not a bad idea, actually. I mean, I like it. That's what you want for that trade. You said next Tuesday. Yeah, it is. Why did I say tomorrow? Tomorrow's Saturday, dumbass. So Monday, put it on. That premium would be cheaper if you do it Monday. But the IV also might be higher Monday. I don't know, right? I think you could probably put it on if you go 21 days out. You'd be better off than if you did the 14 day or the 7 day. Sorry, the 7 day. The reason I went to the 21 day instead of the 14 is the implied volatility. The IV on the 21 is 53%. The IV on the 14 is 58%. So you want to pay as little as possible. But you don't want to go too far out in time either. So I can't tell you which side would be better or which expiration, either August 8th or August 15th. You could do the math if you wanted to. You could do the math, break it down, and then choose whichever is best. But at that point, you're just squeezing off pennies. So it really doesn't matter. You're looking for a big breakout, and this structure looks good for a big breakout. I like it. Now, you need a big breakout, though. If you stay inside of this box, you're going to lose money. You're not going to lose all of the premium, but you'll lose a significant amount of it. So you won't you won't take a total loss, but you'll take a sizable loss. Potentially $1,000. You need it to break well out. Like, you need a move above 345, 342 and a move lower than 251. And even then, I don't know that it'll be break even or better. And that's what you're going for, right? Break even or better. This was a big move, but this also happened isn't when, I don't remember when, is that from earnings only? Like that was a huge move. If you could get a move that big out of this structure, you'll make money on that trade. I know they got hit real bad when they lost their CEO, but I don't remember when that was. I guess it doesn't even matter. It doesn't even matter. You just need a big move. MACD suggests lower, but I don't know what you're talking about. But it could also make another push to new all-time highs before it crashes. We watch it day by day. I think you're talking about Bitcoin, because Philippe said, I was hoping Bitcoin was faking people out and getting back in the range, but no, I guess this will screw up big ETH monthly close and alt season. Not yet. Not yet. It looks like some alts are already saying alt season is over, right? Like, dominance is what you need for the alt season to go lower, right? The total charts still have not broken out of anything. The total charts are still inside of higher monthly closes. Like, you got a higher monthly close here. This is a good breakout for this month, and it does look good for upside continuation. So both totals look real good for upside continuation, but you're into like resistance, which just means that, you know, a lot of your alts went into resistance and they're pulling back some. That's all that means. So Bitcoin is pulling back some as well, but it's still good. It's not in danger of being a false breakout yet, but it's almost there. Like, it's almost there. This is your area right here of importance for buyers to basically say, yeah, it's worth the risk still to be a higher buyer, because the trend is still in good shape. That doesn't mean if you lose this 50% retracement that Bitcoin is done. It does not mean that, guys. Right? We're just looking at probabilities and objectivity. That's all we're looking at. So objectively, you're still good on the monthly range. So this could be a bear trap today. So don't fret just yet. Today's Friday, so you're going into a very low liquidity environment for the next 2 days. Very low, Saturday and Sunday. So you could see a big move because liquidity's so thin on those 2 days. So if we see 2 range bound days, that'll be really good. That'll still be good. Because then Monday, what we could look for, or Sunday night, would be a run below this current week's low. And that's only if Bitcoin closes under last week's low. Right? So if Bitcoin closes under this is going to be next. This is going to be the weekly low if Saturday and Sunday doesn't take it out. Right? So this level will be important Monday. So price could trade under it and then trade back into the range, and then buyers may jump on it. Looking at this to be a trap, a bear trap. Because you're still bullish, you're still up nicely on the month. It's still a very attractive long. It's not bearish. It isn't even close to being bearish yet. You're also coming into the 50. This is a lot of volume too today. This volume, even though price is still looking heavy on the daily range, this could be getting bought up. Look, the sellers can't even make a fresh freaking low, dude. Like, this is your daily low. You have not made a fresh daily low yet. So everybody needs to just chill out. Like, this is still very, very bullish. This is not bearish. This is still very, very bullish. If you want to look to short it because you think this is the first breakdown day, you can be my guest, right? You might be right. Nobody knows. That's the thing. Nobody knows what's going to happen. So if you want to go into the weekend thinking to yourself, you know that price is going lower, you can do that. I wouldn't, but you can. It still looks okay. We don't have to worry yet. Don't have to worry. But I don't like that it's chopping here after making a very small run. But we have to remember, Bitcoin has ETFs now. A lot of things have changed for Bitcoin. It's not that thin market cap, big moving, wild, risky asset anymore. Bitcoin is, a lot of people own it. A lot of people own a lot of it. And a lot of people owning a lot of it would not be the case if they didn't think it wasn't going higher. That's as simple as I can put it. Michael Saylor would not be buying Bitcoin with billions of dollars if he has not fully looked into this. He has had a team of people, a big office full of the most intelligent people money can hire, working on this. And they have came to the conclusion that he wants to buy a lot of Bitcoin. Now, he could sell all of it tomorrow and make billions. He's up billions, right? I can't remember what it was, what his cost basis is and how much he's up, but he's made a lot of money. He's made a lot of money. So at any point, he can go ahead and cash out. If that were to happen, Bitcoin would collapse and the sellers would be right. But as of right now, Bitcoin still looks good, technically. Right? It still looks good. I'm taking the crypto or the CT long on gold. I don't know what that is. Bitcoin, I'm looking to enter a short low of day. Wait. Okay. I got confused there. I was like, first you're going long, but you're looking for a long on gold and a short on Bitcoin. Gotcha. I do not see strength right now in Bitcoin, and the bull scenario is a bit slipping out. I don't understand. You don't see strength right now in Bitcoin, and the bull scenario is a bit slipping out. Seeing that Bitcoin barely hold the 115. Now, I don't know what 115 has to do with anything other than it's this trend line, but it is holding it. I don't know what you mean. Like, it's not holding it when it's trading under it. As long as it's trading above it, it is holding it. It's just testing it. Like, that doesn't mean that Bitcoin is bearish. I have a hard time understanding what some people I see in this. I just don't understand it. But to be fair, you are breaking down today. You are, for the first time since you put in this higher closing daily, closing under it potentially. So for the very first time since over here, you can say Bitcoin is breaking down out of a range. My argument to you and everybody else that thinks like you would be, but you're doing that at a higher freaking price. Down here, when you broke down out of the range, that was at $100,000. Up here, you're breaking out of the range at $117,000. So That argument of seeing that Bitcoin is no longer bullish is failed already. This from here to here is up. That is the very definition of bullish. Bullish means prices are moving higher. Yes, they are moving lower today as compared to all these daily lows, but compared to a monthly, weekly, quarterly, yearly, Bitcoin is up. It's going up, not down. This is how I want you guys to start thinking, because if you do, you'll get better at nailing the right side of the trade. You'll stop taking the wrong side. To be a short on Bitcoin right now is objectively wrong. You might be up, you might make money as long as this ends up being the high. But there is no thing on this chart that says this will be the high. Nothing. There is nothing in the macro that suggests we're going into a recession. Nope, nothing. We've had one negative quarter of GDP, but GDP is expected to go higher. So, and then the other 5 data points that consider a recession, they're all good. So no recession, and inflation is still consistently trending lower. We are in a rate cutting cycle in the Fed. So on the macro, it's hard to say we should be short right now. Anything. But you could be right, because I can't see into the future. No one else can either. And anything could happen. But if you put the evidence that we have, like if you are a detective, and if you are a trader, you are a detective, your job is to detect the evidence and put together a thesis and then apply risk in the manner that is with your thesis. That is what you do. There is no evidence to suggest that Bitcoin has topped out and is going to roll over. You're just simply saying it because you want to be a bear. Like, that's it. There's no objective evidence to state we should be short Bitcoin. None. None, dude. Come on. But this is what I'm doing. I'm trying to teach you guys to you do understand that it is a mindset, right? Trading is a mindset. And if you consistently be negative minded on an asset that is consistently positive and growing, the chances are less likely that you will make money over time. Now, there are traders, professionals that are sell side only traders. They only look to make money when the markets retrace. If you are a trader like that, okay, that's fine. But I have to ask you, how is your P&L looking this year? And if your answer is it's up, well, then keep doing whatever it is you're doing. Just keep doing it because you're making money. If you're not making money, I would be strongly suggesting to you that you stop trying to short Bitcoin because you think it's going to do something. That is what keeps losing traders, is because they keep thinking price is going to do something, and it's usually the opposite of what price is objectively doing. You know what I mean? It's like, oh my gosh. All I can do is shake my head and just keep saying the same things over and over again and hope that one day it sticks. I mean, there's a lot of people in here that are doing much better because they see markets in a whole different light. Like, objectively speaking. Okay, like Bitcoin on a chart, whether you look at lines or candles, right? It is going up. Like, long term, this is going higher. We will be bearish when the time is to be bearish on Bitcoin. Okay, if you're new to the channel, I got bearish here. Okay? And the reason I got bearish here is because inflation was skyrocketing. It was going up. And because the Fed came out and said in October, we are going to start hiking interest rates. So I got bearish, and I had everybody telling me I was wrong. And I was trying to tell people objectively, the market conditions are changing. And then we caught this short because it was still in a tightening cycle. We were raising interest rates. Everything was the same. Inflation was still going up. Everything was the same. And on a technical basis, Bitcoin was retesting the yearly opening range from underneath the yearly opening range. So we shorted Bitcoin when it did that. And we nailed boom and boom. But then everything changed. In 2023, everything changed. Inflation was drifting lower, right? We were still in restrictive territory, but everything was drifting lower. Inflation, that's the killer. But now everything is different. You're in a bullish market cycle. It won't be until the Fed changes or something happens and breaks the macro. Right now, the macro is bullish. Now, there might be some stuff out there that says you should be careful. I would tell you that. Yeah, you should be careful buying all-time highs always. Because there is no guarantee that it's going to continue going and putting in fresh all-time highs. There's nothing that guarantees that. But if you put all the evidence, this chart is going higher. And it's probably going to keep going higher. I mean, until something bad changes. The only thing right now is tariffs. You knock those out of this market, there's nothing really. But when it's time to start looking for shorts, I will tell you that I'm looking for shorts. Like, I'm bearish. I am bearish. When my bias changes from bullish to bearish, we will catch the bear move. I wasn't bearish here, so you can argue that I missed this move. We didn't, because we were still shorting it based on technicals. But we still had a bullish long-term bias. We still wanted to be buyers of risk and of Bitcoin, because there really still wasn't anything to carry the bear market. There wasn't enough macro evidence to carry a long year-on-year bear market. And here we are now, higher. So we'll become bearish when the time is right. We will short the crap out of it. Now, these alts are different because a lot of these have they're like, the macro does not matter. There's no macro fundamentals that says you should own a fart coin. No reason to own this. This is a speculation vehicle. So I would rather you think Fartcoin's going to roll over and be short and be bearish on Fartcoin than I would you be on Bitcoin. Because there's a lot of macro fundamentals on Bitcoin, because a lot of people like Bitcoin. Nobody likes Fartcoin except us. People that like the volatility that this gives us. That's why I like Fartcoin. I don't own it. I only trade it. I only look for intraday opportunities. Because it moves so much. Like, it's a good moving asset when it isn't range bound and choppy. But even when it is range bound and choppy, you can still make money on this. Because each and every day, you can get up to and even beyond 10% moves on this thing. 10%, like that every day almost. That's crazy. That's awesome. We like that. That's why we trade it. I learn something every time I tune in. Great channel. Thank you, Dave E. I agree, Nick. I was referring to the current price. Okay, got you. Got you. Yeah, and when I talk, like when I say these things, King Money, I am not, like, I'm not trying to disrespect you or tell you that you're wrong. I don't know you, so I would never do that. You know what I mean? I'm just, my job is to try to beat it into people's heads that I understand that making money on the downside is so much funner. It's because it happens a lot quicker, right? If you just look at Fartcoin right through here, it took days to move up a little bit. It only took days, 2 days to give back all of that. So yeah, it's a lot better to make money on the downside. Like, we're trading where we were on Tuesday, July the 15th's opening price. So since then, it took 1, 2, 3, 4, 5, 6, 7 days to climb from 129 to 170. It only took 2 days to get back here. So making money on the downside is much funner. Much funner. And although I don't think alt season is over yet, I do think that if we get above the 50, it will be threatening that. So if dominance gets back above this point, it will be threatening that at any time, even if it's next month. We start to get back above this, your alts are going to melt. They're going to bleed, right? They're going to give back a lot of what they gave, for sure. So we can approach this objectively. That's what I'm trying to teach you guys to do, because you will do better in your future as a trader. You just will make more money because you'll be objectively bullish when you should be, and you will be looking to put on risk where you should be to participate in any up move you get in the future, right? That's what you're supposed to do. So that's why I want you guys to do these things. I mean, it's just, you get in trades, you get to stay in them longer, for one thing. And you're not constantly getting stopped out because the market's going against you because you think price is supposed to be doing something. But some of these, like Bonk, still looks fantastic. It's not threatening a downside move. That's why we exited this. Fartcoin is threatening that. Fartcoin is right now threatening that. You are trading under that. Today is the first. Yesterday you closed under it. Today you're getting continuation lower. But that's a lower low. We were able to take out yesterday's low. That's good. Now what we want to see for the rest of the day is this to continue. Because we're not far enough away from this point to be objectively bearish yet. Right? And at any point, support can show up. That's the problem. At any point, support can show up. So us getting short here, we're not trying to say we think Fartcoin's going to give it all back. That's not what we're doing. We're just trying to take advantage of some intraday volatility. But right now, as long as Fartcoin is under this price right here, Fartcoin is threatening to give back its gains. It's already given back a significant portion of those gains from the time this monthly opened. This was where the month opened. So for this whole month of July, anything above the open, 1.14, was a gift. It was a gift. You've given it back, a lot of it. That's concerning on the very near term. For the last 3 days, that is concerning. But it's not over yet. It needs to break down from this trend line, and then it needs to give you downside continuation in the future for you to be able to say, yeah, all season is probably done. Or at least, I don't even know if you'd be able to say that then, but you would be able to say Fartcoin is probably pretty close to done. Or at the very least, it's going to just stay a very choppy, vehicle for just trading. It's a trader's paradise. That's what it is. That's all it is. That's all it is. It has no value as far as what the market says it has. And whether or not buyers or sellers, they can argue as to what it's really worth. But all I care about is this volatility. I like it. It allows me to be able to make money consistently. And I love that. It's almost like they want to push Bitcoin higher while screwing up alts gains for everybody. Well, I don't know who they are, but you could be right. You could be right. I don't know how much, like, I'm not a big crypto guy when it comes to like knowing what these things, like what their purposes are with the code and what they were designed to do, like all of that. I don't know, and I don't care, right? My job is to participate in the open market and try my best to speculate what I think it may or may not do. But I'm going to do that from an as objective standpoint as possible. Because all of these cryptos, in my opinion, are nothing more than speculation vehicles. Ethereum has worth and value as it was designed to do something. Solana was designed to do something. Like the cryptos that were designed to do something, they do have some value, right? But something like Fartcoin, I think it was designed to be a speculation vehicle. It's a meme token. A meme is for funny, haha. Doge, Shiba, Bonks, like those, they're just speculation vehicles. But I don't know what the purpose of XRP and Litecoin and all that is. I don't care. Doesn't matter. I can speculate. But I mean, obviously we want to see Bitcoin pump and just keep pumping and pump and never stop pumping. But in reality, that's not going to happen. So it is up to us to basically find out where these potential price swings can happen, and then to participate in the market to, make money on any growth that it has in the future. Right now, this is a very small pullback from the highs, and it is struggling to break out. And that is because there is a lot more money in it now than there used to be. So now you got people buying and selling Bitcoin based on so many different reasons. Every time someone buys on Bitcoin on an ETF, the person that owns the ETF has to then go short either options or futures to cover that long position that retail has. So that is what causes price to be choppy. And now that you have BlackRock and ARK and so many ETFs that have to do that, because they can't just buy Bitcoin, let you buy it from them, they're holding long exposure on Bitcoin. So they're exposed to long only Bitcoin by allowing you to purchase the ETF from them. So they must now go and offset that exposure. Their job is to make money on fees and stuff like that. So they really don't care about direction or what the market says its value is. They are making money on fees, and they don't want to participate in any volatility. So they have to offset all ETF purchases. All of them. Every single one. Every single time an ETF is bought, they have to short another product. That is what causes these sideways consolidation moves. That is why you will no longer, in my opinion, see Bitcoin just rip in one direction or the other. I think those days are over. I think now what we'll see moving on for Bitcoin is a lot of sideways choppiness with expansions higher and then back into consolidation. That's what I think will happen in the future. So, but Bitcoin is still very volatile. It still offers up nice moves. It's 2.6% today. From the open, it's moved 2.6% lower. So you could have shorted the open on Bitcoin today in theory and made money, as you did get a 2% move in that direction. So as long as it keeps doing that, it's still also going to be a great speculation vehicle. Because the S&P and NASDAQ, let's see, the NASDAQ has moved 0.11% today. Right? Your NASDAQ, it has moved all of 0.11%. It's unchanged on the day. But there's still millions of people participating in this move. Millions. So in terms of volatility, this asset has zero volatility compared to Bitcoin. Now, when you use leverage, obviously, you know, just like I know, you can get your head torn off by NASDAQ because it's moving, and leverage makes those moves bigger. But if you just bought with no leverage, $100 worth of NASDAQ at the open, you would literally be up a few pennies. It has not moved at all. It is almost completely unchanged on the day. That's why people love crypto and Bitcoin, because it has those big moves. That's why people love your penny stocks, right? Because penny stocks can go up 100% in one day. That's why people love those. It's the volatility. It's the actual aggregation of price in one direction or the other that is attractive to volatility scalpers, momentum buyers and sellers. That's why people love options. They move a lot. They move as far as percentage change. That's what you need. You need that to make or lose money. You need a percent change. All right, I'm going to play suggested tracks and see what kind of stuff they like. But anyway, so yeah, this doesn't move anywhere near Bitcoin. Even when Bitcoin moved a lot yesterday, it hasn't really moved a lot today, but from the open, it has. It's moved down 2%. So this move literally came from the open. That is your opening candle right there. So the opening daily price of Bitcoin was 18.4 exactly. And it instantly repriced lower. So this move came last night. The London session is right here. So this is where the London session opened. And what did you do from the London session open? So on Bitcoin, if you strap the Bollinger Band on that, here, let's do this. Which, I mean, hopefully you guys understand all this. This is how we make money. But the London session, it didn't do anything. It hasn't even, it's choppy. So there's your open. Get rid of this. Where are you at? Where are you at? Where are you at? There you are. Boom, boom. So there's your London session open. And price has literally, from the open, expanded in both directions. So you set a fresh higher high in the London open, and then you immediately set a fresh lower low. And then you chopped inside of both the high and low until this candle. That's why it is virtually impossible for us to guess what price will do. Nobody that got long or short when the London session opened thought, well, not nobody, some people did, because some people were pros and some people make money, but not many retailers are thinking that Bitcoin's going to open at 2 a.m. and then go up and then go down. They want it to either go up only or down only. They don't want it to go up and then down. But that's what price usually does. That's why it is impossible for us to figure out what price will do. Objectivity is your friend. You're welcome. You can change color and settings. You're welcome. Yeah, thank you. Rum Mountain says, CME gap fill, test of daily 21 plus a weekly 5 EMA. Typical pullback. Yeah, it is a typical pullback. My CME charts on TradingView are not the same as my CME charts on Charles Schwab. And I don't know why. But they're not exactly the same, and the gaps don't always line up. But there is a gap. Right there. There is a gap. And that gap is filled. There's also a gap down here. Very small gap, but it's a gap nonetheless. And then that's a big gap, but that gap is filled. I'm looking for all the gaps. All the gaps. I'm pretty sure all the gaps are filled except for those two. That gap is filled. Yeah, from this point under, I know all the gaps are filled. There's only one unfilled gap down here. And that's right there. That gap has never been filled. And as long as everything stays doing what it has been doing in the past, that gap will most likely never get filled. All right. Now you can go from the all-time high and pull an 80-90% retracement if you want to and see if that lines up. But I don't think you're going to see any more 90% retracements on Bitcoin. If you see a 90% retracement on Bitcoin, everybody will be wrecked and Bitcoin will no longer matter. Yeah, you need an 82% correction to fill that gap. You are likely never going to see that again as long as Bitcoin stays within the macro fundamental reality that it has as of right now. To be honest with you, right now, one could potentially say that $50,000 Bitcoin is objectively cheap Bitcoin now, because last week closed for the first time ever with the 200 simple moving average above 50K for the first time ever. And that is fantastic news for Bitcoin owners. Why does it continuously take me there? Right here's your 200 simple. And right here's your 50K. Last week was the close that did it. So last week's close was here. This close didn't do it. It was right on it. But last week's close gave us that break and close above. Now, that doesn't mean it will stay here, obviously. If Bitcoin were to collapse, this thing would then roll over. But it would take a long time for that to happen. Right? Because every 200 periods, 200 weeks, would need to go on before this would be back under here. Unless it just fell off the map. But anyways, this is good because looking at Bitcoin's past, being a buyer at the 200 weekly has proven to be a profitable strategy over time. Now, obviously it can still go lower than that. I'm not saying that will be the low. I am simply saying that judging by the past data, being a buyer every time Bitcoin retested the 200 simple has been a phenomenal strategy in the past. It might not be like that in the future, but it has been in the past. And now we're above 50K. So now, if Bitcoin continues to do what it has been doing, when you get back to 50K on Bitcoin, if it ever gets back there, which it probably will, then it'll be a place to be a buyer. Right? But I promise you, when that happens, there will be people on Twitter and on YouTube in my comment section saying Bitcoin is done. Because they always do. They always do. Why would you buy that piece of shit, they'll say. Like they did last time. Like they did the time before that. And the time before that. And the time before that. Right? They always will. They'll always say that. This is over. It's going to zero. Because that's the retail mindset. That's literally, you can't, like, some people can't think past their nose. They can't think past their nose. They only see what is happening right now, and that's only what matters. Nothing else matters. But yeah, this is fantastic news for Bitcoin, and I haven't even seen many people talking about it. And that is awesome. So back here, $50,000 Bitcoin was not cheap Bitcoin. But over here, it is. Every time you've been oversold on Bitcoin has been a fantastic place to be a buyer. You still made lower lows, but it was still objectively, I wish I would have been a buyer every single time Bitcoin. I wasn't trading Bitcoin back in these days. I still was like most people, thinking Bitcoin was full of garbage, like it was just another garbage dumpster fire. But after 2017, I had my eyes on it. I mean, $20,000. Damn. It's time. I mean, at that point, you're bigger than the NASDAQ. You know what I'm saying? Like, you were huge. But these days are over, I think, for Bitcoin. The more and more people invest in the asset class, the more and more smaller the moves will get. Like, it'll be eventually like a Forex product, where if you get a 0.5% move in a daily range, you got a big move, right? And that's only because Forex is levered up too. But Forex does not make big moves. Like a 3% move in a Forex product is a freaking monster move. That's why I was so mad when I missed the short on Aussie Swissy when it moved almost 4% in a day. Aussie Swiss, where are you? Right there. 4% in a day. from high to low, 4%. That is a monstrosity of a move in Forex. And I'm sure on this day, everybody thought Aussie Swiss was ruined, overdone. 3 weeks later, it went right back to 89. This is a mean reversion product. That is why it doesn't do anything. But because of leverage, we can trade these moves. It's just not trending. Forex has been very, very slow lately. Aussie USD JPY gave us a move the other day, a pretty good move, and it trended higher from this, so it might starting to be a new trend, but longer term, this thing is still just trading inside the last 4 months. So until, like, we don't need this. It's a big level and I will care, but really you're not trending until you get above that or you get above this. Like, as long as you're inside of 150.62 and 139.88, you're inside of a range. This candle's range. So you're not trending until you break out to the upside or the downside. And that's kind of what we're looking for. And it will be ultimately to the downside that we will be looking. So objectively speaking, we could technically be looking for shorts on USD JPY now. Why do I say that? Because on the year, you're bearish. That's why. So on the year, you're in a bearish trend. So you could technically short USD JPY as long as you stay under 148.65, because that is where you need to get to break out above May's range. The top of the range is all the way up here. March's high is the important one for trend continuation higher. So it won't be until we break out above March's high, which is March's open and March's high are so close. That's March's high right there. So until we break out above this point, we can't say, okay, a deeper correction back up to yearly open might be happening here, right? As long as you're staying under this point, objectively, the bearish trend is still intact. So the only two places to put risk on short will be here and here. Because above here, it may no longer be a short, because something else is happening within the yearly trend, right? And once you start looking at markets like that, you will be making better decisions in your trading, and those decisions will pay off long term. And I can say that confidently. So we do have a negative bias on this. My main concern is we're above the 21 exponential on a daily. So this near-term trend could be shifting here. In the context of the larger trend, we could have shorted this the other day. Well, I didn't know that it was doing this, but now I do. So now I will be watching this to catch the longer trend. There is a measured move to make here. A big one. Now, it doesn't mean this will play out, okay? When I say things like this, I don't want you guys to think that that's what I think will play out. But if it plays out, we can capitalize on it. That's too much. Right here is good. right? That's if it trends. If it trends. If it continues with the trend that it has had. That is the measured move. That is the target. 134 and 131. That is if the carry trade continues to unwind here. Macro, this is a carry trade on the macro. There is a big spread between the interest rates. And because of that spread, people were long yen or long USD versus yen. And then they used these monies to then go and buy things like Nvidia and all them other things. Well, as the rates come closer and closer into balance, like as the yen rates go up and as the USD rates come down, your interest rates, USD interest rates are doing this right now. If the yen interest rates continue to do this, then that spread will get tighter and tighter, and then people will take profits and close out the carry. They will no longer hold the carry. And if that happens, you can see a larger macro sell-off. But that could also affect other risk assets as well. So that's why it's not a guaranteed short. You know what I mean? It ain't a guaranteed short. The very near term could be changing that trend because of the carry. Though it's not a guaranteed short, but as long as we're trading under this price, my long-term bias is short. So, yeah, it doesn't mean I will make 1 penny. But for the long-term trend to stay in, then theoretically we could probably short it right now. Did we liquidate that swing? What is that high? 950. 027. We did liquidate. No, we didn't. Oh, sorry. I was thinking about it differently. We did not liquidate that high. So I need to see this fail first. And there is going to be an inefficiency. It's not there on the small time frames. Intraday, there is no inefficiency there, but there is an inefficiency there to the upside. So theoretically, this might be a better place for a short. If you get an upside continuation move on today's range. So today or Monday, the yen, if it's going to continue with this move, which it might not, because this is a very small term bottoming formation. It's a 3-drive bottoming formation, and you're seeing an upside move from that because your lower lows were insignificant. Those 3 lower lows there. So very, very near term, it bottomed out here, and then that trend has been really one-sided, hasn't it, since? This might just be going to stay choppy and range bound for the rest of the year, but these lows here, they're insignificant compared to like this low. See how when you broke through this low, you kept going? You could not do that here. You broke through it, but you reversed. You came down, broke through it again, and then reversed, came down, broke through it again, and reversed, and boom! So that's also a good pattern to look for in the Forex market. It doesn't always play out, but it does play out sometimes. It's a 3-drive bottoming formation, or also known as a Wyckoff accumulation. Wyckoff did not invent that. Wyckoff only noticed it and then called it his last name and added the word accumulation and then put it in a book. This has been known for ever since people were speculating in the open markets. That pattern has been known. It's a 3 dry bottoming formation. That's why, yeah. But people love to sound smart and say, oh, there's a Wyckoff distribution formation, Wyckoff accumulation formation, when they don't really need to say all that. But they're trying to sell you on their knowledge. They want you to buy into that they're the super smart people and that you need to buy stuff from them so that way you can then transfer into the same kind of person. Transform into them. So they're selling you a dream. I'm not trying to sell you anything. I'm trying to get you to look at these markets objectively, put on risk at the right time and right place, and then prosper in the markets like everyone else. So we'll wait for the liquidation. We'll keep USDJPY on watch, because this is getting ready to potentially be something for me to short, because I trade all assets. All of them. All of them. The dollar right now, though, in my opinion, might need to cool off a bit, because it has been getting absolutely spanked. So the trending move on the dollar happened. We've been bearish on the dollar, by the way. We've been bearish on the dollar for a very long time, since the Fed went from a tight interest rate and started cutting. Since then, we've been bearish on the dollar, which started in December of last year. So we've literally had a massive macro bearish dollar bias since December of 2024. And we did make money on that. We did. We were long Euro USD for Q1 2025. And we made a lot of money because we got a big move. But it might be time, like the interest rate we're about to get next or in September, it might already be priced in. So we could see the dollar theoretically trade sideways for a very long time. Also, you have that same formation happening right now on the dollar. This is a higher low, guys. So we might not want to short USDJPY. This is a 3 dry bottoming formation here, and this is a higher freaking low. So until we take this low out right here, the very near term, we might have a bullish bias on the dollar, but it will be up to us to decide where we want to put that risk on at. Where are we willing to risk $1 to potentially make 2? Well, we can start by watching this, where it is right now. So, on a technical basis, if we expected the trend to continue, then we would be looking for a short. But since we can see here, here, and here that you've got a 3 dry bottoming formation and a higher low and bullish pressure coming out of that higher low, we might not want to be short. Our longer term bearish dollar thesis might not be in play here. Like, we are going to put that longer term bearish thesis on the back burner. And now we're going to transfer into a choppy sideways range bound dollar. Okay? But if this continues, then we may be able to capitalize on a small up move to find where the top of the longer term range might be. But it could continue to go lower also. So there's that. There's also a huge long-term, like from 2008 bear market trend lows here. Okay. This trend line has held on the dollar since the '08 bear market lows. since the dollar shifted and put in that low in '08 from, the GFC, the dollar has been trending higher since the GFC ended. Since the Fed became trader friendly, the GFC, we've been in an uptrend on the dollar. So this is a very good area to look potentially for a little bit of a near-term reversal on the dollar. We'll keep our eyes peeled, right? It just usually means like the sellers are running out of steam here. Why? Well, because like me, they shorted over here. Coming into this trend line, they're probably going to take profits long term. So that will be conducive to a choppy market environment for a while. Maybe it stays choppy and range bound until we get the interest rate decision, and then maybe it cuts loose back to the downside. We don't know. But right now we know we don't want to be super duper pooper scooper short. Not here. This is a difficult decision to make. It's not really. It's very easy because we won't lose a lot of money if we're wrong. But there's not a trade to take today on the USD JPY. But damn. That weekly. So people will be looking for this down week to have downside continuation depending on today's close. This looks like a reversal, don't it? It looks like the sellers did have it, and for whatever reason they have backed off here. They probably think that it's going to back to revisit those March highs. That's what it looks like to me on a monthly basis. So maybe right here ain't the short, real near term, because they could absolutely, based on that dollar, dry bottoming formation, they could definitely generate enough liquidity to force that higher and then to revisit this range here, the range highs. We'll see what it does after it liquidates this. It may not even liquidate that, though. It don't have to. There's nothing that says that it has to. It's too strong today to short. But if we start to get a move like this, then maybe we will look to short it next week, like say Tuesday or something. But it does look like that's a strong reversal off those lows. I don't know how far that reversal will go. But yeah. We're into a potential area of resistance here. So this is, if it fails to go higher than this, we can short it. Because that's that inefficient zone on the daily. They don't need to push it up there. There's plenty of intraday price action in there. Right here. So it's not inefficient. You see that hourly wick? That hourly wick took that inefficiency out. It isn't there. And that's as high as that hourly candle could close. So we don't care about the inefficiency. We're going to watch to see if we can close hourlies above that. If we fail to do so, I'll throw risk on there. Just for a little move lower. Nothing major. We could be going into a choppy. We've been choppy, but there's definitely moves to make money on here. Like these have been really nice trending moves. It's only on the very long term that it's sideways and choppy, but these trending moves right here are nice. How many pips is that? That's quite a bit of pippage there, 615 pips. What did we get there? We shorted it, stayed in it for a few days. Couple hundred pips. Hell yeah. There's money to be made in that. On these dips, pips, and rips, baby. will catch us some money, potentially. Now, we did get a nice 4-hour closure on the Fartster. Up here, you can see that. We got our nice 4-hour close. That's what we like to see. We like it. We love it. We want some more of it. So we'll just hold it and see what happens. We cannot lose money on this trade. We're good to go, guys. We're positioned well on Fartcoin for now. Nothing to do, nothing to see. Let me answer some questions and we'll wrap this up. See me gap filled, right? Got that. Also testing the 382 to 5 fib last week's range. Hold, super bullish. Madge. What's up, Madge? Madge wrote Madge. Madge is in the house. 2022, the open of London session, usually called the high or low, was firmly consistent. Oh, yeah? Is it not been in 2025? I haven't checked it. I don't backtest data like that, but that is very important information to know. So do you do backtesting stuff on a consistent basis? If you do, would you run that for me and tell me how often that has happened in 2025? I mean, I can find out, but to find out would take me a lot more time because I'd have to manually do it. But if you have a software if you know how to do code, you can do that in TradingView in the Pine Editor. You could code that in a way to run a back test to see how often the low or high of day was put in during the London session for the year 2025. That would be helpful. Very, very helpful. I still do the strategy if I'm awake. I usually am asleep at that time. But if I'm awake, I will watch for that trade always. Always. It doesn't always work out, but I have a whole slew of strategies that I apply to the markets. It just depends on what time it is, what's going on, right? What time is it? What's going on? What have we been doing? What is the overall market environment? Sentiment. And when I mean sentiment, I don't necessarily mean the sentiment indicator. Like, obviously, the greed and fear index is going to show very greedy market conditions. But I can just look at price and give you the sentiment of the day. The sentiment of the last 2 days, 3 days. Like, does it look like it wants to be a corrective week, or are we trending? Are we breaking out? But yeah, Bitcoin is struggling, but it's struggling to do nothing. So since 9:30, we have all went really nowhere. Huh. Really, we've gone nowhere. Here's your 9 o'clock open. We can break it down even bigger or better. We can go straight to the 9:30 candle. There's your New York session open. What have you done? You set a lower daily high and a higher daily low. So you did exactly what you did in London. Well, no, you didn't. In London, you did set a lower daily low. So that's your daily low there. So to be fair, at least London had the balls to give us a new daily low. New York don't even got the balls to do that, huh? Come on, New York. You slacking. Can't even give us a fresh daily low. What's the matter with you? Fartcoin gave us a fresh daily low. Boom. Yeah, baby. We like them one-time framing candlesticks. Like them. There's really nothing else to do. What assets do you guys want me to check out, or what's going on? Nobody's chatting. Everybody's left. Everybody's heard enough of me today. It is the weekend, right? It is time to chill. Give the charts a break. Although I never give the charts a break. I always have a laptop open and a chart on the screen. Usually just off to the side, I can just look over and see where's it be? Where's it at? Always want to know where price is all day. What did bonk do? Well, it was probably a good call to get out of the bonk short, wasn't it? As we got out of it because it's stronger than Fartcoin. So we took our money on bonk. We did get a move lower on bonk. So we took our money and ran. And then left the short on Fartcoin. And that ultimately panned out to be the right decision. Look at that. He does know something. He knows a little something. I woke up late, hung out with the homies, Johnny, Jack, and Jose, Johnny Walker, Jack Daniel, Jose Cuervo. You are a friend of mine. I like to drink you with a little salt and lime. Totally missed the short, but picked up Bitcoin at lower levels. So all's good. Yeah, Bitcoin is struggling to make fresh daily lows. That could be good longer term on the daily range if the ES and NQ can stay strong on the day. And they are currently trying to do that here. They have recovered their intraday VWAP and they have put in an extension up from that point. So it does look as if though the buyers are trying to get a fresh new all-time high on the ES. The fresh all-time high is today's high because you've been trending higher the last 3 days on the ES. You had a big breakout day on the 23rd of July, and you have been moving higher ever since. So yeah, looks good. Looks good. You even put in a higher high on the NASDAQ yesterday, but then sold off. So you're still trending to the upside on risk markets. And that's what we expected all week. When we reversed off the yearly opening range on the VIX, we kind of figured we would see higher highs on this. And we have. So if this can find support, let's go look at that on Thinkorswim, or not Thinkorswim, this one. IWM. It's losing that trend. So buyers are trying to hold the very near term trend, but they have lost it today. This could be a trap. It just did the trap though here. This was a trap. But they couldn't keep it going. So for whatever reason, man, the rest of the stock market, let alone not just everything that isn't tech, is struggling to break out. Well, they're breaking out the rest of the S&P 5. Oh, you haven't even made all-time highs yet on the RSP. Equal weighted S&P. So we can see that basically transpiring on the IWM. So why don't you guys like the IWM anymore? The Russell. What's wrong with the Russell? This could be a support test and hold though. The pullbacks come on lighter volume. Or this was the trap, and then it was set, and then they just, for whatever reason, backed off. So I would say if it closes above the yearly opening range today, that might entice the buyers to show back up on Monday for another expansion week up out of this range. Maybe. Can we buy IWM calls for cheap? Let's see what we can do here on the IWM. We're looking for this to hold for what? 10 days? That would be a risk of about $300 if we bought at the money. That's a 7-day expiration cycle. So literally, if it stays sideways for 7 days, we'll lose that money. $300. But if it rips up above 227, what is that? 1, 2, 3, 4 strikes. If it were to explode to the up, yeah, this is a very slow mover. You would make a couple hundred, you would make like $200 on that trade. That's if we got the move higher. So if you buy a call now and you get a big move higher up to here, you could make a couple $100. But if it breaks down, there's a larger breakdown move coming, probably back down to there. Which it used to be a quarterly low. We don't care about it anymore. What is it now? It's still Q1. What is that? That's Q2's high. Damn you. Can't you do nothing? You worthless. Just kidding. Just kidding, guys. Just kidding. All right, here we go. Let's see what we got. Yeah, for sure. Yeah, if you break down, there's two kind of like two of them. That's really not even a trend line, is it? Like, not really, bro. Neither is this. Like, there's two tags. This, three to make a trend. 2 points is a line. It takes 3 touches to make a trend. So maybe wait to see how this closes today before you get all antsy. Antsy-pantsy. If we close above this, we could take some weekend risk. If it closes back above this, I'll put on a 7-day strike. 224 call. If we close above this. Now, obviously, bad news over the weekend. We're going to be hating life Monday if it gaps down. Right? And there's no way to anticipate what will happen. But on the technical basis don't look great. You don't have any bullish momentum here for whatever reason. You should have gotten it and you just don't have it. I don't know why. The rates are still restrictive. This might not be a good trade until we get a rate cut. That could be what's going on here, right? It's just choppy and garbage because the Fed ain't cutting interest rates. Yeah, I mean, you don't even have a Bollinger Band squeeze or nothing here. I don't love the trade, actually, guys. I don't love it. There's just too much risk here. Just too much risk. Over the weekend risk. The interest rates, they must be waiting for the interest rate cut before they get heavier into this. It's a very slow moving trend. And of course, your technical analyst gurus out there are looking at this as a ascending wedge. So they're looking for a breakdown. A breakdown will send this lower probably. The month looks great. And we're right at the yearly open. So that looks good. This looks good, but it can't hold this that won't look good. We've liquidated. We're trending higher above last month's high. So that's good. It still looks okay for the monthly range, but it's the end of the month. So that could just be profit taking from people that bought the open of July. So right now might not be a good time to look for longs on IWM. Maybe the monthly open will be better suited for longs on the IWM. So we'll wait for then. We'll wait for the September or the August open. And then we'll put on long IWM risk and anticipation of a rate cut for September. So maybe they'll price that in August. But right now, the reason you're seeing it struggle to break out is because it's the end of the month. It's literally the end of the month. Everybody that made money in July, they're taking their profits. They're taking their profits. (2022's) high is up there. That's causing a little bit of... Let's see where that monthly high... Okay, boom. We can call it Q3 2025's high, or we can call it what it is in June's. That's where you could potentially see a pullback too if you break down out of this ascending wedge. Ascending wedges are typically looked at for breakdown potential. So maybe it'd be better to wait for the month open and see, is it still maintaining structure above this high? So we don't have long to wait, just another week. Actually, we'll be able to buy it next Friday. The next Friday, if the IWM is trading above 217.41, we'll buy a call. So we'll have to wait on the IWM. But yeah, that's definitely a trade idea for next week. What's up, James? All right, you guys, we're going to have to wrap it up since it's Friday and the trade we're already in. We're not going to be getting into a new trade. It's just late in the month, late in the day. You know what I'm saying? But we got a new month coming up next week, and we definitely will be looking for opportunities then, because Friday, monthly opens, quarterly, monthly, yearly opens are my favorite time of the years, because you can sometimes get positioned nice for the entire month. And we'll see if we can do that next Friday, but we will be looking for intraday opportunities next week. Hopefully you can make it. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.